weakness for the Indian tech sector. Apurva Prasad, research analyst at IT sector at HDFC Securities, is now with us on the show. Apurva, what's your take on the demand scenario for the Indian IT companies?
Hey, good morning, Reema. Thanks for having me. So demand scenario is incrementally getting better, like what we've been saying for over a quarter now, that the growth and earnings downgrade cycle is behind. It's probably bottomed out, and the protracted IT upgrade cycle and lower discretionary normalizing to H2 is something that seems to be playing out. So I think the odds of that have gone up. Our recent conference where we had about 15 odd companies and a few experts also suggested that there are green shoots in certain pockets.
Okay, but
pockets. And what that improves the probability. Yeah.
Sorry, Apurva, we missed. You were telling us that you concluded a conference where you spoke with a lot of IT companies and the people from the entire ecosystem. What were the key takeaways?
Yes, so like I was just saying, that the deal cycles, the decision making on some parts of the business that has improved. There are pockets of BFSI where projects that were held back have started to get released. These are good initial signs, and I think that's also going to start getting reflected in headcount addition. It's been on a decline for many quarters now. So I think there are some incremental positive signs. What that does is that improves the probability of rate of recovery heading on to the second half.
So what is the growth expectation for the second half of the year for the large cap IT names, for the mid cap IT names, and which companies would have standout growth?
So I think companies which have higher BFS exposure would, because that sector is typically first to react, those could probably outperform. So within the larger ones, there is TCS, Infosys, LTIMindtree. LTIMindtree, where H2 is seasonally stronger for them. Persistent systems within the mid-tier IT companies, that's the one which has been consistently doing well. But we're looking at a low single-digit growth trajectory, which is moving towards high single-digit over the next quarter. So I think that's the trajectory.
And how much of this is already priced into the stocks? Because the index and individual stocks have rallied 30-40% in the last 3 months. Where is it? Which one would be a top pick?
Which is all the re-rating. So all that 30-35% has been P re-rating. As we've seen that, whenever growth bottoms out, you see P multiples re-rating ahead of earnings upgrade, which is what seems to be happening. I think the profit growth is also going to go up increment. So incremental contribution of profit from a mid-single digit last 2 years is actually going inching up higher. So I think that plus the relative under ownership that still stays despite this re-rating, I think would still provide some tactical opportunities. So if you see from a time series last 5 year relative to where valuations were, I think TCS, Infosys, LTIMindtree within the larger ones, risk reward still seems to be favorable. Persistent systems has been performing consistently, so I think these would be some of the that outperform.
All right, Apurva, we'll leave it there. Thank you very much for joining us and running us through